Is Pennsylvania a tax lien or a tax deed state? Welcome back. Now, in this episode, I'm going to answer your question: is Pennsylvania a tax lien or a tax deed state? Now, my name is Ted Thomas. I've been involved in tax liens and tax deeds for the last 30 years. Prior to that, I did regular real estate, but I changed over to tax liens and tax deeds because there was such an abundance and there were so many properties available. It was a great way to make money, and I could really make sure that every year I could do something and not have to worry about the real estate market going up and down. So the last few years I've been guiding people, mentoring people, and now we even have courses where we teach people how to do this. So before we go into this episode, you're going to understand some really unique things about the state of Pennsylvania and how it's evolved over the past few years. So you'll understand the different sales that take place within Pennsylvania before I finish this particular video. Now, the United States has many counties, over 3,000 counties. Pennsylvania has about 67 of those counties, and Pennsylvania generally is considered a tax deed state. That means they're actually going to confiscate the property. They're going to confiscate the property and resell it at auction. Now, I'll be right back and give you the details. Okay, so welcome back. Now, you can expect some different processes throughout Pennsylvania. For example, they have a major difference between the eastern part of the state and the western part of the state. Now, I'm not an attorney, I'm not a CPA, and I'm not a broker. What I am is an entrepreneur. I'm a tax lien and deed buyer, and I'm just a prepared entrepreneur. And that's what you're going to have to be. So Pennsylvania, we call it a state, but the legal process really tells us that it's a Commonwealth. Now, can I tell you what the difference between a Commonwealth and a state is? I can't tell you, although I grew up in a Commonwealth, which was Massachusetts. To me, it was always just a state. But at any rate, you can check that out. But we're going to know the rules in that thing. So the whole reason I even mention it is that you need to know the rules. Those are called the statutes. In other words, the state laws. Now, I don't know what makes up the legal enterprise of a Commonwealth or a state. But the point is, we're going to follow the rules, and that's what I want you to understand. They will have rules. Now, Pennsylvania has been around for a long time. It was one of the original states, okay? Now, you're probably wondering what a tax deed state is and what a tax deed state is. Well, a tax deed state, what that simply means is that the local government will confiscate the property in the event that the people don't pay the taxes. All right, now Pennsylvania is unique because on the east side we have Philadelphia, then they have another district around Scranton, then they have another district around Allegheny County. You're kind of getting the idea. Pittsburgh might even be another district. So they can have their own rules within those particular areas. But as I've been saying, if you watch any of my videos, anytime there's an auction, you need to read the rules for that auction. So auctions can have their own unique rules. So if you lived in Montgomery County or Philadelphia County or Delaware County, in and around the city, well, guess what? They all might have their own rules. But I can assure you that those rules will be different if you go to Allegheny County or you go to Pittsburgh, either one, you're going to find out that the rules are different. So that's what my point is. Now, again, I'm not an attorney, so I can't give you every detail. But I can tell you this. Those districts can do what they want to do, and they will actually publish the rules before the auction takes place. Now, there's different kinds of auctions in Pennsylvania. They have an upset auction. I'll explain it later. They could have a private auction. I'll tell you about that later, too. They could have a judicial sale. Judicial means there's going to be a judge telling people what to do. The point is a judicial sale is probably the one you want in Pennsylvania. And then they'll have a repository. All right, so we'll go into those as we go along. Now, before I get into the specifics of all this, I want to cover a couple of things. So let's start out that the state of Pennsylvania is a tax deed state. Now, what you want to know is how can you honestly and ethically buy properties there? So here's a brief explanation of how all that works. The legislature makes the rules, and then they coordinate with the local county. All right, what they have challenges with is people don't like to pay taxes. So they have to have set procedures for them to do that. So the process, as I say, can be different county to county. The important point here is that you understand whatever the process is, if you follow it, you're going to be okay. All right, so that means the process in Pennsylvania, they're going to sell a tax deed. Now, that simply means that the local government coordinated with the legislature, and what they did is they levied a tax. All right, Now, the next thing their local government, the treasurer, has to do is collect the tax. Now, if they can't collect the tax, then what they'll do, they'll send numerous notices. They call that due process of law. Numerous notices of default to get the person to pay the taxes. Now, if they don't pay the taxes, now the county will take action. The action that they will take is they'll confiscate that property. That's they'll seize the property. Anybody that's on the property, they'll take the people on the property and evict them, whether it's the owner or a renter, they will evict them from the property. Now the county owns the property, they're going to resell that. All right, now all of this process was created long before there was income tax. Pennsylvania is one of the original states. Some of these rules are 200 years old. Are they a little bit convoluted? Yes. Are they a little bit outdated? Yes. But the bureaucracy will keep them going because the bureaucracy doesn't like to change. All right, so all of this stuff that I'm telling you is 200 years old. Now, I'm not an attorney. I'm not a CPA. I'm not a broker. I'm just a prepared entrepreneur, and it's who I'm talking to. So simply stated, the state government, the legislature, makes the rules, then they authorize the county, and then the county takes action and does all that. Now, if someone doesn't pay tax, I can assure you the county is mandated by the state law, mandated that they will take that property. When I say take the property, that means they'll confiscate it and seize it. And once they seize it, they don't want it. The government doesn't want the property. What they do want is they want to sell the property and they want to get revenue. They want to put the property back on the tax roll. So number one, the local government needs money, and the money they get comes from the tax revenue. So you're kind of getting the idea. So as I said, Pennsylvania is a tax deed state. That simply means they'll issue notices of default, then they'll confiscate the property. When they get the property, they'll resell it. When you go to the auction and buy, you're going to get a tax deed that will give you ownership of the property. Now, the bureaucracy takes a little while to do it. They might have different rules in different counties, but you just have to learn that. There is no universal rule. If you learn Pennsylvania, I can assure you it won't be the same in Maryland, it won't be the same in Texas, and it won't be the same in California, wherever you go. All right, so as I said, it's an original state, and they got a bureaucracy there that is a little convoluted, but you can handle it if you'll just study the rules and follow along. Now, there's nothing wrong with the East or the West in Pennsylvania. In the East, they have certain rules that have to be followed. In the West, they have certain rules that have to be followed. So the county can make any provision they want and make any process they want. All they have to do is collect the taxes and make sure that they have money to run the county. Keep in mind, the county has a lot of bills to pay, so the revenue, they want that revenue, and they want that property back on the tax roll. All right, now, in the United States, owning a property is a privilege. Everybody has the privilege, and you can do anything you want with your property. You can subdivide it, you can rent it, you could grow some crops on it, you could build a barn or a house on it, you could raise cattle on it. There's lots of things you can do, but there's one thing that you can't pass up, and that is you must pay property tax. If you don't pay property tax, you forfeit your right to the property. And people do forfeit their right to the property. The county takes the property and resells it because what does the county want? The county wants revenue. Number one job for the county is to collect revenue. So they're going to do that. All right, so everybody has to pay taxes, and there's rules, and the rules are going to just be different from place to place. All right, so you're kind of getting the idea. So let me do a quick review of the different kind of sales, and then I'll show you a little bit more about Pennsylvania itself. All right, so the first sale is called an upset sale. So that means someone waited at least 2 years of not paying taxes, okay? So what is the county going to do? They're going to have an upset sale. Now, I wouldn't get too excited about an upset sale because if you buy at the upset sale, you're going to pay all the back liens. In other words, you have to pay the mortgage, any other liens, any other judgments, anything that's on the property. So a lot of investors wait a little while, and they wait for the judicial sale. Now, the judicial sale is a little different. By that, I mean the mortgage is going to be taken off the property because the treasurer has the power to do that. The judgments will be taken and other liens will be up. So this particular sale is called the free and clear sale. You know, that's how they kind of toss that around. All right. Then they finally have what they call a repository sales. Now, those sales simply mean that properties didn't sell at the upset sale, didn't sell at judicial sale, and then, of course, they actually have a private sale that I'll cover here in just a minute. The point is, There's just rules. You have to learn them. They're a little bit different. If you go to another state, they'll, of course, continue. All right, nothing wrong with the rules being different. It's just the counties can make their own rules, and Pennsylvania allows that. So the counties in the east are different than the counties in the west. All right, so let's take a look at our map here, and you can see that how many different counties there are in the state, and there's a lot of them. There's 67 different counties. That means there could be 67 different ways of doing it within the state of Pennsylvania. You can probably find the county that you're interested in, but that means there's 67 different auctions. Could be 67 different auctions. All right, so you can go any one of those you want. So I talked about that upset sale. So let's review the second paragraph there. It says, in the upset sale, the property is sold to the winning bidder and under the subject of lien on every recorded obligation. In other words, you're going to have to take all those subject to. You'll have to take all those liens. So I don't know how many of you are going to buy at that particular upset sale. Now, it'd be a lot more exciting at the judicial sale. Let's read paragraph 2, and the second line says, free and clear of all taxes. Well, you sure want that. They're going to wipe out the mortgage. They're going to wipe out all those liens. So that's the sale you probably want to be at. Now, I'm not giving you legal advice. I'm just trying to expose you to what's going on here. Now, there could be a private sale. I don't know anybody that's been to a private sale, and I haven't researched it thoroughly. So what I tell you is get a local attorney to explain that to you so that you know what that is. Now, the repository list, well, that's going to happen in all the states. That means they're kind of left over. It didn't sell at the upset sale, didn't sell at the judicial sale. They still want to get rid of it. Remember, the county doesn't want property. They want revenue. All right, so in other states, they call it a leftover sale. Like in South Carolina, they call it forfeited lands commission sales. In Florida, they call it surplus land sale. So there could be any other names like that. So let's just take a quick look at Pennsylvania map now for a second. Now, the counties in the east have one set of rules. All right. Now, the counties in the west could have an altogether different set of rules. But some of the things I want you to be cautious of, and I put a couple of notes up here. All right. The judicial sale could start out at $1. So you remember the upset sale, you'd have to pay all the back taxes, you'd have to pay the mortgage, you do all that. A judicial sale is starting at $1. So think about that. Now, I don't know if the property's going to sell for $1. All right, so these are just some of the rules. You can kind of study the slide there yourself, get a quick look at it. But they'll have properties at all of those different auctions for sale. All right, when they're all said and done and they haven't sold at the upset sale or the judicial sale, they haven't sold at either one, it's going to end up what we're going to call a repository list, which means it's a sale that you have to just buy over the counter. In other words, you go into the county and pick the one you want, and then you can buy it there. All right. There's always going to be properties in all of those lists in the state of Pennsylvania. This is a business of abundance. There'll always be too many of everything. So I'm finished with that particular presentation for night now, but I'm going to take 2 questions before I go. What kind of money will you get started? Well, it's going to be up to you. If you want to buy big $300,000-$400,000 properties, remember the bid started at $1, but I don't think it's going to sell for $1. But if you were willing to pay 20 or 30 cents on the dollar, well, then you could figure it out easily. Some of the properties will only be, going for auction for, it might only be worth $10,000 or $20,000. But the auction is going to start at $1. Now you decide you want tax liens or tax deeds. Well, if in Pennsylvania, you're going to have to buy tax deeds because that's what they have. You're going to get property. Okay, but there's other states, about half the other states, sell tax liens. Now, tax liens, generally people that are very, very conservative because with a tax lien certificate, you invest with the government, you get a check back, and you're going to get a fixed rate of interest. So if you buy a certificate with an 18% return, then you're going to get 18%. If you bought in Illinois, you could get all the way up to 36%. If you bought in the state of Florida, you could get 18%. So it's going to be up to you which one you want to buy. All right, so with all that said, below me, I've got a free gift for you, and you want to take advantage of that free gift, and it'll teach you about tax liens and tax deeds. It's absolutely free. Just register below. And I do want to mention the 2 biggest mistakes that auction buyers make, and you want to avoid these mistakes. All right, mistake number 1. People buy property at auction they have never seen. They haven't seen the property. Now, if you're buying at an auction, you haven't seen the property, that's going to be could be a huge mistake. What if there was a hurricane that got blown and flooded? What if it had damage from wind? What if there was a fire? What if it was next to a chicken farm? I don't know. You want to think about that. So you don't want to buy any property at auction that you haven't had boots on the ground and eyes on it, or someone you know has done all that. Now, we have online buyers do it all the time, but they have someone visit the property for them. Now, the other thing you want to be careful out at auctions is don't buy a property if you don't have an exit strategy. Now, for some reason, people get to the auction, they're all excited, they want to do something, they want to be successful, and they just start bidding. Well, the auction isn't necessarily a bargain. Everybody thinks it's a bargain, but it's not necessarily so. And you'll start bidding it up, and you want to win, and you might win, but you might win by spending so much money that you can't sell the property. So you always want to make sure that you have an exit strategy. So I'm Ted Thomas. Go below me, and there's a free course for you.